Hello, I'm Dean Zerbe, National Managing Director of Alliant Group. Very happy to talk to you about the latest of what's going on in the R&D tax credit. And with me is, boy, talk about murderer's row in terms of knowledge and background on the R&D tax credit. I've got former Commissioner Eric Hilton, former Commissioner of SBSE from the IRS, Mark Everson, former Commissioner of the IRS, Jeremy Fingerette, head of our quality control at Alliant Group with just a wealth of background in the R&D credit, and then of course Steve Miller, the former acting commissioner of the IRS. So just, gentlemen, thank you so much for being here. Just a tremendous background on the R&D and R&D tax credit and tax administration in general. I wanted to start, if we could, Mark, for our folks listening, if you could just give us a general overview of the R&D tax credit as you see it from your time as commissioner, but really your time in Washington for all those years.
The R&D tax credit, Dean, it's been an important feature of the tax code for over 4 decades now. It came in 1981, and Congress has recognized its power at fostering innovation. And think of all the innovation over that period of time. And over the years, Congress has made it more generous, both as to activities that qualify to be claimed and who can claim it, more small businesses. At the same time, I would say it's been an area of service oversight throughout that whole period, including when I was the commissioner.
Yeah, very interesting. Of course, the most good news we've had recently is that the R&D credit was made permanent just a few years ago, so no more extensions. But Jeremy, give us a little bit more of the technical about what businesses can potentially qualify and really kind of what it takes to qualify for the R&D credit.
Yeah, and Dean, the R&D tax credit is a hugely important business incentive. It's the single largest benefit in the Internal Revenue Code, about $10 billion a year just from the federal government paid out. And when you talk about industries, there is a wide variety of industries. We probably work with about 40 different industries. You're talking about technology companies of all type, agriculture, manufacturers of all type, design firms, engineering firms, architecture firms. It has broad applications, and the reason is when Congress drafted this law, they made the law intentionally very broad. So they wanted to invest in companies that were looking at physical and biological sciences, whether it's engineering or biology or chemistry or computer software sciences. They didn't want to pick individual industries. And these days, every industry is almost a technology company. I remember the CEO of Bank of America recently testified on Capitol Hill, and they said, "What is your business?" And he said, "Bank of America is a technology company." Technology is getting into everything these days. You can't be competitive without it. And so this is a hugely important incentive, not only for the big boys out there, but for the small and mid-sized companies as well. And it's a benefit that really serves many thousands of companies well.
Well, that's well said and very thoughtful. I always think of it kind of more in a layman's term of just, well, if you're building not only the new thing, but 2.0 and any improvements to that, that's probably a pretty good candidate for R&D credit. Of course, if you failed on something, that's still probably a good candidate. But also how you're making something, if you're making it greener, quicker, cleaner, cheaper, all may be potential things to look hard at the R&D credit as a benefit. But Steve, the gentleman kind of mentioned, it's been with us for a while, and it's something that the IRS has kind of given a lot of thought to too in terms of guidance. And take us through kind of some of the major changes you've seen over the past few years.
Sure. So I mean, we're here to talk about the latest and greatest, but it's important to put it in context because it's the latest of a batch of things that have happened over the years. Mark talked about some of this already, but the things that have happened over the years, the service tightened up, came out with a discovery rule, Congress sort of squawked at them, administration modified its regulations almost immediately. The administration at one point much later on has allowed ASC to be taken on amended returns. Recent regulations in terms of internal software. The service continues to look at and put out guidance in the area, and we'll talk a little bit more about what it's done most recently.
I think that's smart, though, to understand it's kind of an ongoing process, an ongoing discussion with industry and with CPAs of trying to get it right. It's a big, important credit, big, important for business, and it's always evolving and changing. So thank you for that. Well, let's turn then to the next issue, which is this specific new thing that they've put out recently about what we should be doing in terms of filing filing for the R&D tax credit. And Eric, maybe turn to you and get your sense of what do you see kind of the main components that the IRS is looking at in terms of this filing requirement as you see it?
Yeah, that's a great question, Dean. So the IRS is really looking for three components as it relates to research and development claims. So the first is thinking about it. For each business component identified, identify all activities performed. Second, identify all individuals that perform each research activity. And third, identify all the information each individual sought to discover. Thinking about that also, the costs associated with that, qualified wages, supply wages, and putting all that information on the 6765.
I got you. And Jeremy, take us through that. You've hit the big ones there. I know it's a lot of guidance they put out, but what other elements do you kind of see in there too that they're going to want to now see on the front end of a filing for it?
Yeah, I think what the service is doing is they're looking for the big markers. Have you done proper due diligence? Have you properly identified your business components right up front? Have you identified the research activities that were ongoing? Do you understand what those uncertainties were that were trying to be overcome and the activities in order to overcome them? And then, of course, the costing, right? That's been in the credit for so many years for the wages and supplies, contractors, at least computer services. But they want to see up front at the time of filing that you have done all that due diligence, that it's already compiled, that it's already put together. It's almost a bit of a mini study that they want right on the front end. Not keeping the substantiation back, you're not going to file thousands of pages of documents, but they want to see a statement about all these things right there on the return.
I got you. Well, Steve, as I look at it, it feels almost a little bit like old wine in new bottles, or maybe new wine in old bottles, that, we have this. But what's your take, and how do you, as you step back from your time as commissioner, think, well, here's kind of what's driving the wagon and how people should be thinking about this and seeing it?
So it is not changing the substantive rules, as Jeremy says. It's sort of asking for more upfront showing of, as Jeremy said, due diligence. And we'll see what happens with that, but it isn't a surprise. We'll see what they actually come out with. I'm quite sure they'll have additional guidance here. There's still some questions that have to get answered.
And then, Mark, to your point, as we were discussing earlier, that there's really no change in how let me restate that, who can qualify. In other words, this isn't, if you were qualifying beforehand, you are still going to be a good candidate for qualifying now. It isn't changing that, is that right?
Well, that's right. This is a complex area of the code, and it requires expert analysis of the activities and also substantial documentation. That doesn't change. If anything, there's more of a premium on making sure that's all prepared so that, as Jeremy's saying, that it's included in the initial filing. But absolutely, there's no change on what you do qualifying for the credit.
Right, you were qualifying before, you're going to qualify now.
Correct.
Right, yeah,
Correct.
I got you. But then, Jeremy, as I look at it, it seems, if I'm a CPA listening to this, it's natural you'd think, oh Lordy, how am I going to have to buy more paper for the copying machine to get through all this? But how do you see that? What's the burden on the CPA firm? Does that change at all, or is it the burden on us? How should they be approaching this and thinking about it?
Yeah, it's an interesting question. And to Mark's point, there was a case suitor that came out in 2014 out of the United States Tax Court. And Judge Vasquez in that case came out and said he thought the R&D tax credit was one of the most complex provisions in the Internal Revenue Code. There are lots of moving parts and pieces to the credit. The good news is that's why we do studies. When we perform a study, we identify all the business components. We identify the qualified activities. We identify the uncertainties in question. That's why you have to do that proper due diligence. And for our CPA partners, we will be delivering to them, just like we have in the past, what needs to be attached to a return. They'll include it with the return in their filing. We will do everything right up front. It will be concerning to some folks that maybe haven't been doing all that due diligence, that now they have to get that done, but these are the rules, and it's understandable that the IRS wants to see it this way.
So for a CPA listening, for them, really kind of no change. I mean, we'll be doing the lift and pull on it in terms of it. So for them, kind of fear not. And same obviously for our clients, that it's the work, and it's really, I mean, it's the work and material that we've already compiled. We do this anyways. Is that fair to say?
This is the same project-based approach that we've done for years and years and years. And so all the things that the service is seeking, we already have in our files. Not a big deal for us. We just need to provide it to our CPA partners, which we will, and it'll go right on the return, and we'll keep cruising right down the road.
Well, and Eric, I know you're kind of the newest to us here at Alliant Group. We just are so fortunate to bring you over from the IRS, so you're kind of fresh from their world, and also fresh to us. I mean, if you've seen our processes and what we do, and you look at what the IRS is looking at and considering, do you think it matches up well, that will be a good fit?
Definitely, definitely. To Jeremy's point, Alliant Group provides top quality studies, and it's the best in practice for that. So for our clients, this is not going to be a burden on you. We'll take on that and those responsibilities. Those extra, details that the IRS is asking for, we already have it. So this is not going to be any burdensome on our clients at all.
I got it. Very interesting. And then, Steve, one thing I was thinking about, and Jeremy, you probably got a feel for it too. I know we have some CPA partners that have, we work with, and they may then do some of the smaller R&D studies themselves. And Jeremy, I know you're familiar with this as well too. I could see for them that, given the filing deadlines and things like this, that suddenly it's one more thing to put on the burro as you're going in. That I think, we're certainly happy to work with them and work with our CPA partners to assist them as they're maybe facing this.
I think that's right.
Go
Regardless
ahead.
of the size, and we work with folks regardless of the size of company, the client. We're always willing to help. Eric's right. We do a wonderful job of it. And we do the stuff that the IRS is asking for expressly on the claim form. And we'd be able to do that, for any client that they have. And I'll just punctuate what Jeremy said, which is any additional paperwork, the advance of some of the stuff that we disclose, that is on us. That's not going to be a burden that we put on either the client or the CPA firm.
So there's really nothing new under the sun here in terms of the material and
It's presented earlier.
right.
It's the same stuff that we do, and it's on us to do it.
It's a timing issue more
a
than
timing
anything.
issue.
I got you. Jeremy, any thoughts?
Yeah, I think it's important to note that, the R&D tax credit is not just for the Fortune 1000.
Right.
We pride ourselves on helping the small and mid-sized businesses. Today's small and mid-sized business is going to be tomorrow's Fortune 1000 company. And so making sure that these folks have access to the same benefits or on an even playing field with the big companies is what we pride ourselves on. And if those folks need help, we're the ones that are here to help them.
Well, I think that's a good point, and I'm glad you raised that because just for both Eric and for Steve, I was glad, because folks could naturally hear about this and say, oh, well, this is the IRS, ringing the bells saying small and mediums, we don't want you to take it. But that's why, Steve, I thought it was so good for you to point out so many issues that the IRS has put forward, like taking the ASC on amended returns, incredibly helpful for small and medium. So I just think people shouldn't have a view of, well, this is all about, well, we just want this for the big boys. I think the IRS, it's fair to look at their overall record and say that they want to try to make the R&D credit work for everybody. And Eric, I thought of your time over there. I know it's a little bit off kind of topic here, but the employee retention credit, which has been such a huge boom. When you were just finishing up at the IRS before you came over here, I mean, very much the IRS, I thought, put out guidance that was very taxpayer friendly, trying to help people on the ERC, small, medium businesses take the ERC. So
Absolutely.
I think for folks listening, you should be looking at the welcome mat's still out there for the R&D credit. As you said, Jeremy, it's the number1 credit that's out there for businesses to take advantage of. You just need to take a hard look at it and look at it as a benefit, a potential benefit for your company. It's a tremendous tax incentive to assist you.
Dean, while we have you and while we have this august group, there's an awful lot going on Capitol Hill right now, and I'm wondering if you can give us some insights.
Well, it's easy to have the crystal ball nice and clear for the provisions that have already been signed into law. We had the infrastructure bill signed into law recently. The reconciliation bill, the BBB, Build Back Better bill, that's a lot more cloudy what's going on. But on the infrastructure bill, let's talk about that for a second. Eric, you're the expert on it, know it so well. There's a piece in there on cryptocurrency, your bailiwick. Take us through that. What's that all about?
Thanks, Dean. It's really interesting to see that crypto is really at the highlight of the infrastructure bill. But in thinking about crypto at this particular time, what is included in the infrastructure bill is how to define crypto. And it's defined as a digital asset, which puts it really in a broad sense as a security, commodity, and the IRS looks at it as property, but also thinking about it as who is considered a broker. Now, there's still a really broad definition as it relates to who is a broker. Pretty much anyone who actually touches crypto to some degree is almost considered more of a broker. So I expect that Treasury will be looking at some regulations to kind of narrow that focus right now. But another major important point associated with that is the fact that any crypto activities that you or a trade or business is performing in or conducting over $10,000 is going to be reported. So that is a huge sea change as it relates to crypto. So, I mean, those are just as important matters as it relates to that.
Yeah, I think that's well said. For folks who are in the crypto space or have clients, the bell's ringing. I mean, this is a $35 billion revenue raiser that's in there. This isn't just kind of pecking on the surface. They are really going after it. And Eric, I know you chapter and verse on crypto when you were at the IRS. We're kind of the lead guys, so we're so fortunate and blessed to have you here with all your wealth and knowledge on this issue, so that's great. So we've got that bill, the infrastructure bill. The big boy that's sitting behind it is the reconciliation bill, or the Build Back Better bill as it's sometimes called, and that has still got a lot of moving pieces and subject to a lot of discussions. But one piece that they seem, fellas, to be pretty set on is they're going to see a big boost in IRS funding, about $80 billion over 10 years. They're expecting, depending on who you listen to, it's going to raise hundreds of billions of dollars. We'll see. But, Mark, maybe start with you, and then Steve, I'd like to get both your takes and thoughts of how you see this playing out for the IRS and what have you.
Sure. This is the first time, Dean, in decades that there's been a serious conversation about rebuilding the IRS. And the administration put forth three components: more money for people, more money for systems, and then bank reporting. They wanted more third-party reporting. The third-party reporting has been knocked out. That didn't fly. But there's still considerable impetus behind giving the service more money for people and for technology. So I think that at some level will go through. Having said that, it's going to be a real challenge. It's always harder to build than it is to contract, as the service has in recent years, and it will take a long time to hire and train new people and to build new systems and get them operational. So this isn't something that's going to happen tomorrow or even next year. It's going to take a number of years if it goes through.
Yeah, good point. Steve, what's your thoughts on this as you see it?
So the only thing, I'll start with a couple of numbers. 35,000 people. That's the number of IRS employees that are gone since 2010 to today. 17,000 of those enforcement personnel. 7,000 of those were actually revenue agents. The audit stream is down considerably. They need to build that back. They do. And if the bill goes through, I mean, it's $13 billion plus for this year. That's a 10% plus up, which is nice. 6% per year over the decade. Actually, it was a big number. It's a much smaller number without bank reporting in terms of what it's going to raise. But if it actually happens, you're talking about doubling the size of the IRS over that period. And it's not only going to be enforcement, it's going to be service and IT, as Mark says, and Mark and I agree 100% that probably when we were there, if we had $1, it would have gone to IT, because that's what was most necessary at the IRS. But it is likely to go through because basically it fell out of infrastructure because the Republicans would not play, and the Republicans aren't playing at all in this bill So best guess, I think, is maybe.
Oh, no, I think that's right. I think it'll be in there. This is basically kind of a bill that's limited in terms of the support. So yes, I think the strong expectation is if they have a bill,
Right.
this will be in there. I think the one challenge for the service is more from my time on the Senate Finance Committee and doing oversight on the IRS is I think to ensure long-term support for IRS funding is that I always think of it as a three-legged stool to make certain that you think of it as infrastructure and what have you, but I think of it as service, answering the phones,
100%.
doing that. Obviously, you need to have an audit presence that's robust, but then the other part is then protecting taxpayer rights that folks feel that the IRS has got their feet on the ground. So it's a real challenge for the service. So that's a big part of the bill, but also for folks listening, it's more about quite frankly, the dogs that haven't barked that is the most interesting on the tax bill right now is things that we thought for a long time were going to be included have fallen out, and I don't think they're coming back. So that would be increases in ordinary income rates, except for kind of the millionaires and what have you. They've got a couple of rates, but basically not really much change on OI. Capital gains, no changes in capital gains. No changes in the corporate rate. They're looking at having this alternative minimum tax or a book tax income for corporate. You know, we'll see how that goes. There's kind of a real tension on the bill. Estate tax, no changes in estate tax really. So it's 199A really for a lot of folks listening be a big issue. No changes in that. So a lot of things that aren't happening. They're really kind of scrambling now to find revenue raisers that they can find agreement to. But quite frankly, with the new inflation numbers that came out, there's just kind of an overall tension in the bill in general of, well, how much do we want to spend? How are we going to pay for that? And it's going to be a challenge for the Democrats to resolve that. And as you said, Steve, it's really a Democratic-only bill that they're moving through, and any one senator can hold it up because they only have 50 senators there. So stay tuned. We'll see how it all moves out, but they've got the infrastructure bill through. They've got the cryptocurrency. I think one way or the other, you'll see IRS funding going up. But on the actual taxes, feel free to contact me. I'll try to give you the best from the crystal ball, but at the moment, it is a uncertain beast right now. I think Santa Claus, maybe by the time Santa Claus is coming up and hooking up his sled, we might begin to know what's going to be in it. Gentlemen, I wanted to let you all have any last comments or thoughts for our audience before we left because I know they're all busy folks. And why don't we start with you, Eric? Why not?
No, I mean, the IRS is very much in support of the research and development credit, but they want to make sure you do it correctly. And this new guidance is trying to increase their overall efficiency and how they're assessing and looking at the credit. So they want you to do it correctly. So
I would just say for years, we've followed a model that has scientists, engineers, business process experts, and they work together. There's an agriculture team or a software team, a whole series of teams within the group. And so they've worked together, recognizing the difference, what Jeremy said, there are a lot of industries that are affected by this, recognizing those differences, and putting together the data and the information that is geared towards that industry. And this is all going to now be compiled to us at a high level in this new reporting for the IRS. So it sort of flows naturally from the way we've operated.
Yeah, I think it's important to note the R&D tax credit's a great benefit, but it has a lot of requirements, and you got to do it right. And this is the IRS's way of saying we want to make sure that due diligence is done before you file.
Right.
That the right numbers are put on the return, that the effort was made to make sure that the right projects and the right people and the right dollars, and let's put our cards on the table at the time of filing, make sure that the right answer is there so that there can be less due diligence and audit by the service, so that the service can go focus where it needs to and have the understanding and comfort that the due diligence was done up front and the right answers are found
Right.
up front. And that's not an unfair
I think that's well said. That one hope of all this is that it'll focus IRS resources elsewhere and let folks who are qualified for the credit and doing it right kind of can go about their business. So that's a hope on it. And one thing I'd say too, and I forgot to mention earlier, is we'll continue, obviously with these gentlemen, we have a tremendous background in knowledge and experience, and I was on the Hill as well too as counsel for the Senate Finance Committee. We've benefited very much from having dialogue and discussions with the IRS about what they're putting forward here in other areas. We had great success on the ASC on amended returns. And so we're looking forward to that. We very much take seriously our role as a voice and champion for small and medium businesses. And we look forward to having a good discussion with the IRS to have this in a path that works for everybody, for them in terms of tax administration, but for small and medium business and their partner CPAs. And we think those will be fruitful discussions. But Steve, go ahead, tell us your kind of last thoughts.
The only last thought I'll have, it really echoes what's been said before, which is if you're eligible for the credit, don't let anything the IRS has done recently, it hasn't done anything that should dissuade you. Bottom line here is it means that you have to do a good job. You have to use somebody that does a good job. But what they're asking for is to do what these gentlemen have said. One, make sure that somebody has done some work before those numbers go on the return. And again, as I said at the beginning, this is part of a continuing process of interaction with the IRS on the research and development credit. And it's only the latest of what they're doing. And we still have questions, and as Dean said, we'll talk to them about it and keep you updated.
And with that, I just want to thank my panel again. This has been extraordinarily informative, and I really appreciate it. And for those listening, I very much encourage you, for goodness sakes, work with you and your clients, work with us. Take the R&D tax credit, take a hard look at the R&D tax credit. But if you have any questions about this latest guidance from the IRS, please feel free to contact us. We're happy to talk you through it. I think you'll find once you walk through it that it's all very manageable and workable. So with that, thank you very much and appreciate you giving us your time today.